All right, let's get started. We're going to learn, we're going to expand, and actually, guys, what we're going to be doing is called active learning. Like I know that you all love to ask questions and answer questions, but you all having to come up with the words yourself and then kind of expanding on the knowledge that you know, this is the best way to learn. Active learning versus passive learning, which is anybody watching this video later, it's more passive because the answers are right there. Does that make sense? So we are going to get right into it. When you have questions, let me know. So let's start with the first one. A blank is the legal document that transfers ownership of real property. What is it? What goes in the blank?
Would that be the deed?
The deed?
The deed. Dina, you're like, it can't be that easy.
Why do I feel
Sometimes
like I forgot everything?
it's, you know what? Let's just say a lot of people, I think everybody here will tell you when you get on the exam, all of a sudden everything you know leaves your head. And here's the thing, you all have seen me when I'm teaching, you've heard me. Sometimes you all know I know the word. You know I know what I'm talking about, but it just leaves you. And you just have to hold faith. That's the only thing I can say. Like I never get scared. I'm not going to remember.
I
And
have
you
to
know what?
get
If I
rolling.
don't,
I have to
you
get
just
going.
gotta just keep on going. If you forget it, you're like, I know this, and I can't think of it right now. I want you when you're testing, just skip that question, mark it, and come back to it. Because we all do that sometimes. So, yes, a deed is the legal document that transfers ownership of real property. A general warranty deed provides the highest level of what?
Protection.
Protection. Now, why? I know that we're putting in protection, and I know we just talked about this
Uh,
earlier today, but why? Why does a general warranty deed give us so much protection?
yeah, basically make sure that the previous ownership and then the previous history is free and clear of any sort of encumbrances.
Yes. So the big thing is that it's the strongest form of ownership because it provides the most warranties. Unlike the special warranty deed says, look, I'm only promising I didn't mess it up. But with the general warranty deed, if I give you a property there, Carl, I would be saying, I don't care if I messed it up or if the previous owner messed it up, Cam, because she's a little weird, a little crazy. Dina had it before that. She's a little crazy too. I, I'm not covering that. In a special warranty deed, I'm only covering me. And a general warranty deed, doesn't matter who messed it up, I'll cover it. And then when you're studying, don't forget to look at the different types of warranties that come in a deed. Are you all familiar with this? The warranty, like the covenant of season, the covenant and the right to convey, all of those. Those are things you want to make sure you just kind of have on the back burner. And I would say they're like 30% words. I know we talked about 20% words the other day being words that, you got about 20% chance of them showing up. But words like season, you probably have more like a
Mhm.
30 or 40% chance of showing up. And remember, the covenant of season means that you actually own it.
You could
And then
prove
there's a covenant
ownership.
of the covenant right to convey that you actually have the ability to sell it. All right. A quick claim deed offers no guarantees and is often used to clear what on title?
Encumbrances?
Encumbrances for
Well,
lien.
encumbrances, but there's a word.
Cloud.
Cloud.
Oh,
There you
yeah.
go, Carl. Look at your cloud on title. So, yes, an encumbrance can be a cloud on the title, but not all encumbrances are. So, you might consider, well, I guess you wouldn't say they're all negative. And for a deed to be valid, it must be delivered and blank by the blank.
Signed.
It must be delivered and,
Recorded.
Signed.
Accepted.
oh, you know what? I think we're going to go. It must be delivered and signed by the grantee. But I also love what you all said. It needs to be delivered and accepted. So I tend to, because I always use that acronym, I get paid with every deal, where I stuck delivered and accepted together, but those are two different distinct concepts. It does need to be delivered, and just because you delivered it doesn't mean the person's accepted it. They have to truly accept it. And I take this back. I just said this wrong. What did I say wrong?
Oh, the grantor.
The grantor. Who is the grantor?
The borrower or the owner?
The owner.
Owner,
Mhm.
yeah.
That's the original owner. If we were talking about a deed of trust, then it would be the borrower. All right. A blank lien applies to a particular property, while a blank lien affects all property owned by a person.
Specific and general.
Very good. Specific lien applies to a particular property, while a general lien affects all property owned by a person. Example of specific liens include
Mechanics lien.
mechanics lien, which is right here.
Oh, yeah, I didn't see that.
That's okay. What else are some specific liens?
Um,
Tax lien,
Tax
property
lien,
tax lien.
assessments, yeah.
assessments.
Oh gosh, there's more than that. Why am I not thinking of
That's okay. And so here's what I would encourage you to do is when you get to something and you're like, I know there's others, that's where you go back to your notes. That's where you go back and you would look to see, like within the chart, I can pull it up. What am I looking up? Oh, types of liens. Had to think about what I was even doing. And going the wrong way.
And then would the general lien be like a judgment? Like say I had a judgment against me, that would be a general lien against all
Yes.
my property.
So we're
Okay.
right here in our types of liens. We said there's specific liens. So there's mechanics liens, there's mortgage liens, there's real property tax liens like special assessments or your taxes that you pay all the time. And then like a judgment lien, you're absolutely right, Carl. It's against you. It's against you and everything that you may own. So I like to think of, let's say you run up a huge credit card bill. They're going to put a lien on you and say, hey, you need to pay us. Versus like our tax liens, which are going to be like your IRS liens. Right? If you owe the IRS money, they're going to take everything. They don't just stop there at, what's it called? At your property. Make sense? Now, as long as we're on this chart, does this chart make sense to everybody?
Yeah, can I ask a question about the special assessment liens?
You sure can.
So like in my old town that I lived in, they moved from like well to city water. And so the homeowners had to pay for that conversion, but they paid it in like a 15-year installment. Would that installment be considered a lien on your would that be considered a lien at that point or no?
I would consider it a lien. It may not be due, kind of like your taxes. It may not be due right now, but if you were to buy that property, you would see that, yes, this money is due. And then I would definitely make sure in the contract itself, who's going to pay for it. So let's say it's $30,000 and I own the property now and you're trying to buy it. Some states, it's already included in the contract. Like I know in North Carolina, there's a base of what it says. In other states, that's something that you as the agent or something that the title company or the attorney need to find and then bring up. And some states, you're going to be required by law to share it if you're the seller. So it depends.
Awesome. Thank you.
No problem. Great question. That is what we're here for, to break it down. So we're all good. Nothing question. No other questions on this little chart.
Can I ask one thing?
Of course.
So involuntary and voluntary. So is specific liens involuntary? And
so not necessarily. It depends on why. So involuntary means you did not choose it. You did not sign up
Right.
for it. And voluntary means you did. So a mechanic's lien is involuntary. You did not want, I mean, you didn't pay, but now they're putting a lien on the house. You didn't say, hey, put a lien on my house. But you know what? You did with a mortgage lien. With a mortgage lien, nobody's forcing you to get a mortgage. They're like, hey, do you want this money? Then you're putting a mortgage on the house. So it's not about whether it's specific or general that says whether it's voluntary or involuntary.
Okay,
It is
okay.
about, did you choose to do it? And for the most part, the only one that's voluntary is going to be mortgages. I can't think of any other one that, I mean, I
Okay.
don't know if any other time somebody's like, yeah, you should totally put a lien against my
Yeah,
property or me. I mean,
got it.
I don't know.
Okay.
Any other questions? Those are great, great questions. Okay, let's go back to our other thing. Vroom. There you go. So we said a specific lien applies to a particular property, while a general lien affects all property owned by a person. And we got our examples of specific liens and mechanics liens. Okay, so that was tax liens, assessments, mortgage liens, mechanics lien. A blank lien is the example of a blank lien. Well, if we just talked about specific, I'm thinking this word has to be general. So what would be, we just looked at it, what would be an example of a general lien?
Property tax.
That would be a
No.
specific
Oh,
lien.
wait, right. Yeah,
A
yeah.
mortgage?
Nope, that would be a specific lien too.
Okay.
Judgment.
A judgment.
Oh,
So let's go
right.
back. I feel like there's no E in judgment, but there we go. Y'all know my spelling
Oh, like
skills
income
are.
tax, not property tax.
Ah, yes.
Okay.
So yes, and you're going to want to make sure that's something I learned as I've gone through. When you say tax, it can mean so many things, right? So let's think about this. You've got your income taxes, right? You got your income taxes. You have your real property taxes. You have your transfer taxes. I mean, does that make sense? Like there's so many different types of taxes. And then I know for each of you, each state has some type of transfer tax. Like in North Carolina, we call it excise tax or revenue stamps. Depending on your state, y'all might need to know how to do that math.
Okay.
And you know you're going to have to know how to do the math, whether it's mills. So you know mills, you're going to divide something by 1,000. Or if it's just like some dollar amount, maybe it's $1.50 per 100. Make sense?
Yeah.
Cool. So when we look at this, we want to, and you probably, I mean, I use this thing all the time. See if you can write this out yourself. I think that is a great way to study is if you say, okay, I'm going to make the encumbrances chart. Note, probably don't write it sideways like I did. That was just for space. Probably write it down, like make it go up and down. But see, can you come up with all the different encumbrances? Once you get the encumbrances, could you name all the different liens? Could you name the different types of easements? That will be a wonderful way to study. All right. Okay, back to our sentences. In most cases, lien priority is based on the date of blank. How do we know who gets paid first? How is lien priority done?
This is confusing to me. I don't know why.
The topic
recorded?
Yeah, the topic of who gets paid first, especially which mortgage gets paid first. But yeah, liens.
Okay, so let's talk about this. Nope, that's not what I want here. So you know that a lien is recorded where? Where do you go to record a lien? They've got a lien in their hand.
The county?
The county what?
County clerk.
The
Clerk.
clerk, the register of
Clerk of
deeds,
Oh,
right? It's at the register of deeds.
And there's like three of them, right? Because I feel like I've seen that come up where it's like there's three options where it can be recorded or no.
Well, I mean, so you can record, I'm not going to say for every state, but at
Okay.
the register of deeds, you can have liens, you can have birth certificates, death certificates, marriage certificates. So a lot of things can be placed at the register of deeds. Maybe your county has different things. Like
Mhm.
I know when I'm talking about legal descriptions, we talked about recorded plats. Everybody knows what a recorded plat is, a subdivision map. Well, you're going to have a book of just plain deeds, but then you have a plat book, which is nothing but plats. So depending on what that question was, I don't want to say for sure there might not. I mean,
Oh,
you could maybe go to a different office for each one.
okay.
So when you go to the register of deeds, let's say that Dina, you're buying my house. Right? You're buying my house. Your attorney or title person would have made sure it's 123 Happy Street that there are no liens on it when you buy it. But unless you just won the lottery, you need a mortgage. Whether it's a mortgage or it's a deed of trust, so then the day of closing, you now have a mortgage lien. So let's say, what is today? Today's 8/22. You bought the house and they put a mortgage lien on your house. This is the banker, right? Well, you got some work done because you didn't like my style, boo to you, and you didn't pay somebody. So on 10/1, there's a mechanics lien. And then they're going to go and record it. So now we have this mechanics lien here. And let's go to the next year. Let's say it's July of 2026, because right now it's 25 for this recording. In July 2026, you racked up credit card debt. And they put a lien against you. You know that credit card debt would be a judgment lien. I don't think there's an E in judgment. I think there's an E in judge, but you take it off for judgment. I don't know. But that's a judgment lien. And then let me just throw some more liens on there. Maybe you did not pay your HOA dues, and then 10 years later, you don't pay your taxes, something happens, and now you have a real property tax lien. When we talk about recording and the priority of liens, the very first lien that is recorded, that is what we call the senior lien. And everything underneath it is junior. But I could say that this judgment lien is senior to the HOA liens, but it is junior to the mechanics lien. Does that make sense?
mhm.
So now you've done all of this and you owe all of this money and womp womp, you are now going to be foreclosed upon. Oh. Well, they're going to sell your property. And when they sell the property, they're going to pay off everything we're going to pay off what you owe people. What we do is we say, hey, you know what? Government always wins. The first person to be paid or the first thing paid, first lien paid is going to be your real property tax liens. I don't care what other liens came when. This will be the first lien paid. Now, as a side note, lien 0 is going to be the attorneys, or what we call the cost of sale. Attorneys aren't stupid. They're like, oh, no, we got to pay court costs. Nobody's getting paid unless we get our court costs paid. That's our first thing paid. Then they say, okay, we got to pay these real property taxes. Those take priority over everything, kind of like me in the order of children in my family. I take priority over, I'm not just kidding. But real property tax liens get paid. Everybody else goes in the order of which they are generally recorded. Now, I say that because some states you've got different things with mechanics liens and when did you do, but for the most part, when you're answering these questions, so if you owed all this money, they're going to pay off the court costs, then they'll pay the real property liens, then they're going to pay the mortgage off, then they're going to pay the mechanics lien, then they're going to pay the judgment lien, then they're going to pay the HOA liens. In fact, I know you've heard this term when you're testing, and I hate this pen. We're going to try this one. Subordination,
Mhm.
right? When we're talking about subordination and there's a clause in there, the subordination clause is when this banker, that's an N, this banker says, hey, just so you're aware, there should be no other liens before us. We want to make sure we are the first people paid after property taxes. That's the subordination clause in the promissory note. We have to be the first lien paid after property taxes.
Wouldn't they always be the first? I mean, after the taxes, wouldn't the mortgage be the first recorded?
So there are times when other liens can be, I'm going to explain it. So let's say when you first got your lien, it was for $400,000 and you had 30 years to pay it off. 25 years has gone by, so you don't owe that much money, but you need to take out a huge home equity line of credit. Maybe you need to take out $300,000. You don't owe that much on your home. So now if you're the second bank for this new mortgage, you are probably going to say, hey, we really need to be paid first. Like, we're giving you all this money. We kind of like to be paid first. And you can ask the first bank to subordinate to the second one, and they would do that with a subordination agreement. So the subordination clause says nobody can be above us without our permission. Oh, now you want somebody above us? So it could even be the same bank. Because it's different liens. Let's say you went to Bank of America. Bank of America had the first one 25 years ago. Now they're giving you the second one. They're like, this is a higher interest rate, and we want this one paid off first before the other one.
Okay. Thank you.
Make sense?
Yes, thank you.
Yay, good. Does that make sense to everybody? Does that confirm what you already knew?
Yeah, can I ask a question in
Of
regards
course.
to the like the deed and the situation here? So say I was to sell my house with all of these liens
Mm-hmm.
and I'm ready to sell my home, would this be considered a quick claim deed or would this be a quick claim title, or would this be a general warranty title? Or because this is where I get confused, or do I go and get this all cleared up first and then finalize the selling of my home? I think
Okay.
that's where I get like confused.
Okay, no, that is a
Question.
great
Yeah.
question. I love that question. So remember, Dina, you bought the house for me, and then this is Dina's debts. Boop. And now, Dina, you want to sell to Carl. Well, Carl, you don't want all of her debts, do you?
Mm-hmm. No.
So we're going to clear this up, and it all kind of happens at once, right? You're going to hire that title company. You're going to hire that attorney who's going to come in and say, you know what? We got to get rid of this mechanics lien. This mechanics lien's got to go, right? So this mechanics lien, you need to pay that off using a quit claim deed. This judgment lien, we'd like you to pay that off too. We'll put a quit claim deed, right? They're going to, the HOA, once you pay them off, so the HOA put the lien on your house and they're saying, remember, a lien says this person owes me money. And then what happens is when you pay them, that HOA says, we quit any claim we have on the property. That's why it's a quit claim deed. So I'm just going to say quit claim deed. All right. So then the day of closing, You just gave a bunch of money to Dina. Dina's
Mhm.
attorney or title company is going to pay off all of these things, record all of these quit claim deeds, so it's clean title. Then
Got
the
it.
next deed that will be recorded will be, Carl, your mortgage.
Mhm.
Now it's good, clean title, and you could build whatever liens. I mean, not that we want to have them, but you would have your liens there. Does that make sense? So what
Yeah.
after these deeds are recorded, especially her payoff of her loan, right? So we have to make sure that that gets recorded at the Register of Deeds. Once all of that is done and it's good, clean title, the banker would record the general warranty deed that says this good now clean title from Dina is going to Carl. And then to make it even worse is Carl, if you're in a title theory state, you're turning
Mhm.
around and giving title to the trustee
Bank.
using a
Oh, no.
deed of trust. Does that
Got it.
kind of clear it up?
Yeah, that helps a lot. Yeah, because
That is a great question.
thank you. Because I was kind of reading or studying all the material as like I could buy a house and it may have a quick claim deed, which I guess in some cases like maybe that could happen, but whereas other cases you would get a general warranty deed. But in this situation, it seems like we would always get a general warranty deed as long as the title company went and did the
So
work
this
they need
is
to do.
a wonderful question to explain why you all are learning this. Like, I know a lot of times you all will say, we're not the ones writing deeds. Why do we
Mhm.
need to know the difference between a quick claim deed and a general warranty deed? Like, this doesn't make any sense. Well, here's why. It's because, let's say you're my broker, Carl, and I come to you and I'm like, look, I want to sell Amani my house. She's my cousin. And I wanted to pay like half. It's not a big deal. We might have an attorney draft us our own contract and she's like, you know what, Candace, I'll take over any kind of mechanics liens. We might decide to do a quick claim deed.
Mhm. Okay.
And you would need an attorney for that. But most of the time you're going to want to see a general warranty deed. Or if Amani wants to buy my house, you may pull up the deed and see, well, maybe I gave it to Amani and now Cam wants to buy the house from Amani. She might see that there was only a quit claim deed from me to Amani. She's going to want to make sure that we definitely check the title because it was transferred via a quit claim deed and not a general warranty deed. Like most states are going to say in a basic purchase contract, the buyer wants a warranty deed. You want the most coverage. Is that the
Mhm.
only way to transfer title? No. But 99.9% of the time, it's going to be some type of warranty deed. And if it is anything besides a warranty deed or a general warranty deed, same thing, you're going to call an attorney or the title company immediately. So excellent. And that question tells me that you're doing exactly what I want you to do. Knowing the vocab is great. Knowing how the vocab works and why it's important is even better. So I love that. It was excellent.
Thank you. It helped
Unlike
a
my
lot.
drawing
So,
skills.
yeah.
So we talked about subordination, we talked about quick claim deeds, all of this. It all kind of comes together. All right. Back to this one. Let's see. In most cases, and I am right here, in most cases, lien priority is based on the date of recordation. I mean, it says recorded, but recordation, except for blank, which are always the first lien paid. Who did we just learn is the first lien paid?
Taxes. Oh, no,
Taxes.
the attorney.
Well, the attorney is the first person or charge paid. Real property taxes are the first lien paid. Make sense?
Yes.
So think of it this way. Court costs get paid first, and then the first lien gets paid. The court's going to get, just like when you get oh, Amani, yes, you can share this Zoom with a friend who's studying as well. That is fine.
Oh,
The
thank
court's going to
you.
make sure that they're going to get paid. All right. All right, next one. An agent owes fiduciary duties to the
Client.
Client.
client, who is also called the client. Uh-oh. So what's
Oh,
another
yeah.
name for the client?
The principal.
The
Principal.
principal.
These duties include loyalty, obedience, disclosure, and reasonable.
Care.
Mm-hmm.
Skill, care, and diligence.
Yep. Sometimes when I'm teaching, it all comes out as scare. You owe reasonable scare. Okay, good enough. The third party in the transaction is called the.
Broker.
So you have the broker. The broker has their client, and the person they don't work for is the. Who's that other?
Customer.
Customer. There you go. So when we look at it, Carl, we're looking at it from the point of view, you're the broker, I'm your client, you owe me these fiduciary duties, right? The old car. But if I'm the buyer, you might be working with Amani as the seller, working with her. She's the customer. So you owe her disclosure of material facts. You can't lie to her. You owe her what we call ministerial duties. And I'll spell that for you all. Well, I'm gonna try to spell it for y'all. Ministerial, sure, duties, which is just basically not lying, giving material facts, being honest, and that kind of thing, being fair. Agency can be created by express agreement or by blank through the action of parties. What do you call it if the agency isn't created right in writing or expressly verbally? Agency can also be created how?
Implied.
Implied. Love it.
Implied.
Love it. Or I would say through implication. It would be implication if we actually conjugated some words there. So are we feeling good about how agency is created? It could be created expressly. It could be through implication. It could be through estoppel. Right? Cool.
Can you give us the definition again of estoppel? I always like forget that one.
Yeah.
I feel like
Estoppel is the idea that what's the example I usually use? Think of it, if you walk like a duck and you talk like a duck, the doctrine of estoppel says, we're going to consider you to be a duck. So if I start holding myself out as a duck, not that it was implied, like you and I are working together and we're doing all these things together. That's implied. You're with me. But if I just randomly hold out to Dina, like I act like I'm your agent, I act like this, I'm doing, you may not even know at some level, if something happens and I end up in front of a judge, I can't be like, well, I never told Dina I was Carl's agent. She just assumed it because I was quacking like a duck. Well, the doctrine of estoppel says, look, Candace, if you acted that way, we're going to go ahead and just make you Carl's agent. It's the easiest way to understand
that
it.
helps.
Better yet, go ahead.
Is ratification one way or no?
So let's say I acted like his agent. If he wants to make it real, he would ratify our relationship and then it would become an express agreement. Does that help?
Yes.
Cool. All right. The Civil Rights Act of blank prohibits all racial discrimination and property transactions with no exceptions. It's a date. We're looking for a date.
18.
1886 or something.
1886.
Is it 1886?
66?
It is 1866. 1866. The Fair Housing Act of 1968 added protections for race, color, blank, religion, and national origin. What are we missing there? Now, before you say anything, later amendments added protection for blank status and disability. So what are those two blanks? Can anybody give me
Ethnicity.
the acronym? You said what, Cam?
Fred's corn.
Fred's corn. All right. So Fred's corn. So let's fill out this Fred's corn. So does anybody know what the F stands for?
Is it the
Status.
familia?
Yep, familial status, for family status. And we know that is whether or not there are children, not whether you're married. What's this first R stand for?
Race.
Race. The D
Disability.
Discrimination.
is disability.
Oh, disability.
That's okay. And we know it's mental and physical disability. The S,
Sex.
Sex.
sex. And we know that covers sex, gender, sexual orientation. The C,
Color.
mhm. The R,
Religion.
and the N.
National origin.
And for the family status, I feel like I saw this one come up. Even if a woman is pregnant, that would still cover her, correct?
Yes.
Okay.
Exactly. So the Fair Housing Act added protections for race, color, blank, religion, and national origin. And later amendments added protection for, we know this is familial status and disability. So what are we missing? What's missing in that first blank?
Ethnicity.
Well, ethnicity falls under race. We know ethnicity and
Age.
Sex.
Origin?
no. All right,
Sex.
so let's check it off here. We got familial status, right? Familial status, familial status. We got race. We got race.
Disability.
We got disability.
We got national origin.
National origin.
It's sex.
Okay.
Y'all really forgot about sex? Y'all forgot about sex? Really? Sex, so you can see there. Right? So that was our missing one. Now, Carl, you said something. You said age. Age is a protected class, but not for fair housing. What's the act that includes age as a protected class?
Is it the like with lending?
Yep. ECOA, the Equal Credit Opportunity Act. And that gets kind of confusing sometimes. Just remember, age is included, and a public assistance. Like if you're getting money, let's say you do have that disability and you're getting money from like a public fund, they can't say, oh, you're getting money from the government, you don't qualify. Absolutely not. They cannot do that. All right. Practices like blockbusting, steering, and blank are prohibited.
Redlining.
Redlining.
Panic peddling too, maybe?
Okay,
Yep,
well,
yeah.
red line. Why can I not spell? Like as I get older, I'm like spelling is going out the window. And then Alexa earlier, she didn't help. So you said panic peddling. Panic peddling is the same as one of these words. Which one of these words?
Blockbusting.
Blockbusting.
Okay.
So panic peddling or blockbusting.
And
Who
another
does
one
that
would be
affect? The buyer or
panic-
the seller?
seller.
Seller, right? That's when you go to a neighborhood and say, hey, you need to move because people who like Duke University, Dukies, are moving in. We don't like them. Boo to them, right? I mean, I'd move too. Nobody wants a Duke fan. And then, or what it was, Patriots fans, even worse. Eesh. So steering is where you're like, oh, you're a Duke fan? Let me put you over here in this neighborhood with the rest of the crazies. That would be steering. And then we know redlining is when banks come in and say, well, we don't give loans in this area, usually because the racial makeup of the area. Sound familiar?
Yes.
Okay. Number 5. Oh, it's a long one. A blank contract binds both parties to perform, while a unilateral contract only binds one.
Bilateral.
Bilateral.
Love it. A typical real estate purchase contract is a blank contract. Bilateral or unilateral?
Bilateral.
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 Bilateral. Why is it bilateral?
Because they're,
Promise for a promise.
yeah,
Yeah, what is the seller promising?
to pay.
To make sure the
To
deed is
purchase.
good, right? To make sure title's good, to move out, to let you come in to do inspections possibly. And then that's what the seller's doing. The buyer's making sure that they're getting a loan and that they're going to show up with cash.
Purchase.
Both people have things to do. That's why it's bilateral. A blank contract requires a seller to sell and something the buyer to buy.
A blank contract.
What kind of, it's not a very well written one from, ChatGPT. What's the type of contract where if I'm the seller, I have to sell it to you, but you as the buyer may not have to buy it?
An option.
Jen,
An
It's a
option
lease.
contract.
Yeah.
An option contract requires a seller to sell and does not require, okay, that was a lot of words for a little blank there, the buyer to buy. To be valid, a contract must have mutual assent, lawful objective, competent parties, and
okay.
what's missing?
Does that have to have legal in there or no?
Conveyance.
Does anybody know
Oh my
what?
gosh.
Anybody
Wow.
know I know, isn't it hard? It's
Mutual
hard when you don't
agreement,
have a
mutual
chance.
agreement.
Mutual
You
agreement.
got it. It's MCLL. Mutual agreement. Check.
Consideration.
Oh, yeah.
Consideration.
Oh my God. What's wrong today?
Girl, I'm blaming it on perimenopause. You can too if you want to jump on.
Me too.
This is what
me
I've just
too,
started
me
doing. I'm like,
too.
yeah, it's perimenopause, sure. I think it's just I'm getting old. But it's hard. There's a lot of vocabulary, y'all. So
Yes.
MCLL, mutual agreement, consideration, legal objective, and competent parties or lawful parties, whatever you want to say. Now remember, not all contracts have to be in writing. Some contracts have to be in writing, specifically the ones that are a transfer of interest in real estate. What is the name of that act that says, hey, if it is a transfer of interest in real estate, it needs to be in writing?
Statute of
Statute of frauds.
Statute of frauds, yes. What are the chances they're going to test you on the statute of frauds?
100%.
Like
Hi.
150%. You
Uh-huh.
know you're going to have to, you're going to be tested on this one. Hello, cat, go away.
I like that one. I
The
got that
statute
one
of frauds, you
memorized.
like that one?
Yeah, please
A-
give me that one. I got
You
that.
know, look, you are going to get
Yeah.
some test questions like that. You are. You are. And Sarah, I see you in the chat. I'm trying to keep up with you there too. But if you unmute, if you can, it'll probably be easier. A voidable contract can be enforced by one party, while a blank contract is not enforceable by either.
Void.
There you go. A void contract. A void contract. Because if it's void, it's not a contract at all. It's not enforceable. There's nothing there.
And that would be, I always get like confused between the two. With the void would be like if there was a minor involved, right?
What state are you in, Carl?
I'm in Florida.
Most states, I don't know about Florida, but in most states, if it's a minor, it's voidable. I know for
voidable,
sure in California, it is void. And let's see, I'm gonna do what
But
I
isn't
always
it normally
do.
considered voidable if it's a minor? It's
Did I just say
voidable.
that? Did I say that
Oh,
wrong?
sorry.
No, you said it right. You said it right because in California, it is definitely void if they're under 18. But I know it's normally voidable outside.
So
Okay.
we're gonna do my favorite thing that I love to do. Have I named my chat GPT? Yes. Don't judge. Hey, Uncle Ray. In In the state of Florida, if we're talking about real estate contracts, if a minor signs a real estate contract, would it be considered void or voidable?
Question. So in Florida, if a minor signs a real estate contract, it's generally considered voidable rather than outright void. That means the minor or their guardian typically has the option to either enforce the contract or void it. Once the minor reaches the age of majority, they can also choose to ratify it and make it fully binding if they want. So it's not automatically a done deal, but it's got that flexibility.
Thank you.
You're very welcome. Anytime, Candace. If there's anything else you need, just let me know.
Dude, I love me
Thank
some
you.
ChatGPT,
That's
y'all.
so crazy.
It's
Wow.
so crazy. And we saw he used the word ratified. We saw the use of the word ratified there. That was awesome because we just talked about it. And did you see how that kind of he would have ratified it? Love it. Love it. And you know what you can do, y'all, is you could probably, I'm not tried it, but you could probably ask ChatGPT to say, hey, could you tell me how, explain to me in an easier way what ratification means and how it relates to contracts? Like it is good for stuff like that. Again, not 100% perfect all the time, but it's still very helpful.
Yeah, every morning I do 50. I've been having to give me 50 questions, and then it's been awesome on top of, all the other learning material. But
Love it.
yeah.
I mean, that's who wrote these, y'all. I wish I don't have the time in the day to sit down and write these. Could
Hi,
I?
Candice. Hi, Candice. Hi,
Hey,
Elena.
Elena.
How are you?
I'm doing great. I'm glad you're here.
Thank you for the link. Thank you.
All right, number 6. A or an blank easement involves two properties where one benefits and the other serves.
Easement, appurtenant?
Appurtenant. What does appurtenant mean in general?
It's run of the land.
Runs with the land.
It runs with the land, right? It runs with the land. Appurtenant means it runs with the land, right? The benefiting property is the blank tenement. Dominant. And the other is the servient tenement. Easements can be created by, how can we create easements?
Prescription.
Prescription,
Necessity?
necessity, or just plain expressly.
Hmm.
Right? Now, it could also be by law, but that depends.
Wait,
So-
prescription and adverse is the same, right?
So they're both very similar. We usually call it an easement by prescription.
Right.
That's a P. Versus adverse possession.
Right.
Adverse possession is about you're trying to own the property. Generally, but in both of them, you're saying, hey, I've been using the property for so long, let's make it real. But adverse possession is about, I've been living here. Remember, you had to have it, your use had to be open,
Ocean.
continuous, exclusive, adverse, and
Notorious.
notorious. You're trying to make a claim for ownership. And the easement by prescription means I'm just trying to make my right to use or cross the property permanent.
Okay.
I'm not trying to claim ownership of the
Okay.
property. But they can, they're very, very similar.
Thank you.
No problem. An easement in blank is often held by utility companies.
Gross.
An easement in gross. Very good. Very good. All right. New color. I'm sick of green. Blue. A blank mortgage is one in which the interest rate remains the same.
Would that be the straight line or a more? I can't even say it right now.
Amortized. I think
Yeah.
what they're looking for there is fixed.
Convinced?
A
Fixed.
fixed mortgage is one where the interest rate remains the same because in contrast, a blank rate mortgage adjusts periodically based on a specific index. So that'd be
Adjustable.
adjustable. Now, I heard somebody say conventional. Can anybody tell me what a conventional mortgage means?
Not government backed.
There we go. Not government backed.
And it's built by like private investors.
Yep. Funded by private investors or the bank or whatever. It's not.
Also it's a PMI insurance.
Yep. With conventional, we have PMI. You know, if it was a FHA loan, it would be MIP. There we go. So in contrast, an adjustable rate mortgage adjusts periodically on a specific index. Most fixed mortgages are fully blank, so the payment amount does not change and will be paid in full at the end of the blank.
Amortized.
There you go, amortized. So the payment amount does not change and will be paid in full at the end of the
Loan
Very good,
Nope.
Dina. I saw you.
Nope.
Term.
term.
And by term, we know that's the amount of years, right?
Mm-hmm.
So when you're studying, guys, you can do a couple of things. You might say, hey, I know this payment amount doesn't change because, and not because, and we get that payment amount from the factor. That's where you use that amortization chart. And you said it'll be paid in full at the end of the term. Well, if it's not paid in full and there's a big balance at the end, what do we call that big
Balloon
payment at the end?
payment.
Balloon.
Balloon payment.
Balloon.
Does term only mean time frame then, not like the interest rate and all the details? It's just time.
It's one of those words that it's a context clue word.
Okay.
Because I could say the terms of this mortgage
Oh,
are
yeah.
30-year fixed, for blah, 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 blah. But you could also say the term of the mortgage is how many years it is. Like,
Okay.
it gets tossed around. Well,
It's interchangeable,
yeah.
kind of.
Okay. Number 8. The blank rate is used to estimate the value of an income-producing property.
It's income.
Cap rate.
Cap rate.
Cap rate. There you go. The cap rate is used to estimate the value of an income-producing property. It is calculated by dividing net operating income by the property's what? How do you find value? You divide the NOI by the property's... Oh, wait. I just gave y'all the answer. Sorry.
Yeah, value.
So the
is-
cap rate is calculated by dividing the net operating income by the property's value. So we know if you're looking for value, you would take the NOI and divide it by the cap rate. But if you're looking for the cap rate, you would take the NOI and divide it by the value. When calculating a property's NOI, blank should not be included. Ooh, good one. There's something, when you do the NOI, there's something you should not include. Anybody know?
Expenses. So that's net
Well, you
operating income.
Does it
for
start
net
with a D?
operating income, you are including expenses.
It's gonna be not mortgage.
The mortgage payment. That's right, Elena. Very good. That one's a hard one, y'all. So let me come here and talk about it. Let's get a new page. So when you're looking for NOI, what you're going to do is you're going to take the potential gross income. And remember, this is an annual amount. How much would you get if everything was rented for every day and everybody paid full price? And from that, you're going to subtract out your vacancies. And remember, this is expected. This is what you think is going to happen in the future. And when you take out your vacancies, you would have there's potential growth, effective. That's the word I'm looking for. Effective gross income. Right? The effective gross income. Then from your effective gross income, you take out your operating expenses. And that's going to give you your net operating income. But if you're a state that's doing the math, or if you're in California and they just kind of make it a word problem, you don't take out the debt service. The debt service is not part of that. The net operating income, this is it right here, net operating income. If you do take out the debt service, that is your, what we call the throw off, or your, there's another word for it, but it's cash throw off. There's another word, it'll come to me, but it's another step. It's a different step that you're looking at. So for each of you, you've seen problems as you've done problems for your state, like math problems. If you've had to talk about this or do this math, I would tell you to write this out a couple times, just as a memory thing, because it's not hard math. You're just subtracting, but you got to remember the different steps. All right? Okay. The government survey system divides land using blank and blank. Oh, what are the names of those two lines?
Principal meridian
Mm-hmm.
and baseline.
Baseline.
Yep, and baseline. Which one runs north and south? Goes up and down.
Principal.
It's a principal.
Principal meridian, and the baseline runs
East.
east
East
and
and
west.
west.
Right? A township is a 6 mile by 6 mile square made up of how many sections?
36.
36. Amani knew that one. She was like, I got that one. Each section is blank mile
640.
square.
640.
1 by 1.
1 mile by 1 mile. It's 1 mile square. So it's 1 mile. And just because how many feet are in a mile, how long is a mile?
43.
50, 80.
Oh, right. Oh,
It's
really?
like, it's a 58, 50, 55.
43, 560 is acre because somebody said it. It has something to do with the vegetable that you put on salads.
5280.
5280. 5 tomatoes. 5 tomatoes. 5 tomatoes. And so a section contains how many acres? Somebody said it earlier.
640.
640. This system is commonly used in blank U.S. states. What part of the country do
In
you
the
see it? In the what, Elena?
rectangular survey. Rectangular survey.
Well, it's called the Government Rectangular Survey System, so yeah. But where do you
where's
see it?
used?
Link as description.
Well, it's used in the Western.
Oh, okay.
It's
like
used in
farmland
the
and stuff?
Western United States. You said what, Carl?
Like farmland, agriculture?
Nope,
no?
it's used completely to the west. Basically,
Okay.
everything to the east, like when you go up towards Maine, and then the first 13 U.S. colonies, we all use just either the plat system or the meets and bounds. But when you go west, all the land was split up. I mean, they used it. It is used. You can still find it based off the Government Rectangular Survey System. Okay. Oh, we just talked about this. A fully amortized loan is one where the payments include both blank and blank. When you make a
Interest and
payment,
principal.
yes, I'm going to call it principal and interest. Each monthly payment gradually reduces the loan balance, with more going towards blank over time.
Interest? No.
Does how much you put towards interest get higher in a fully amortized loan, or does it get lower?
No, no,
The
no,
principal.
no, it's fixed, it's fixed.
No, it's not fixed. So
Your
each,
principal gets higher over time because you're paying off your interest.
yes, the principal gets higher over time, and early payments are mostly interest. So let's look at that for a second, shall we? Amortization schedule. I know y'all have seen this before, but it doesn't hurt to see it again. So we can see where this payment was $21.55.01. And in the very first payment, $18.22 was interest, and $332.09 was principal. And then the next month it's $18.21 and $333. And then it's $18.19 and $335. And then $18.17 and $337. Does everybody see what I'm saying there? Yes.
Mm-hmm.
So you start with mostly interest at the beginning, and just a little bit of principal. And just because I like to point it out, because it hurts my feelings and it should hurt yours too. It is not until a payment in here, like 220 something. It's not until you're here that you almost are half and half principal, half interest. That's more than half of the 360 payments. And this is why banks rule our country. Just saying. Just saying. Crazy. But does that make more sense now to everybody? The blank clause in a deed describes the ownership interest being granted.
It does it start with an H?
It does start with an H.
I can't pronounce it. Don't make me pronounce it.
I won't.
Addendum.
Addendum
Yes.
clause.
Yeah. Candace's favorite
Addendum.
word.
Mm-hmm. Look, that one was a word that took me years, guys, to get comfortable with. I was like, the habendum, what does it even, is that like Latin? Where do we get the word habendum clause from? We're not going to ask ChatGPT, although I do ask him a lot. It usually starts with the words to have and to, just like when you get married, to hold.
Hold. No.
This clause clarifies the type of ownership. So it would say, oh, you're getting a fee simple absolute. Oh, you're getting a life estate. Oh, you're getting a defeasible estate. That's what it's going to talk about. All right, number 12. Blank insurance protects property buyers and lenders against unknown title defects.
Title insurance?
Title insurance. A lender's policy protects the mortgagee, where the blank policy protects the mortgagor. Who is the mortgagor?
The
buyer.
lender. The buyer.
Well, it's the owner's
owner.
policy.
Yeah, owner, not buyer, right?
That's okay, but it is the buyer's policy, but they're the owner. So they've now bought the house. So let's take this back to what we were talking about earlier with Carl. The seller sold me a house. So the seller is the grantor on that general warranty deed, and I would be the grantee of that general warranty deed. I turn around and I give title to the trustee using the trust deed. So that makes me the grantor, and that makes the trustee the grantee, right? And it makes the bank the beneficiary. So the title insurance is two policies. one to cover the bank's interest and one to cover me, the new owner's interest. Okay. These policies are typically paid once at, when do you usually pay
Closing.
for? At
Closing.
closing. There you go. Unlike other forms of insurance, it protects against past, not future
Claims.
claims. There you go. Equitable title gives the buyer the right to obtain
Future.
blank title
Future.
at closing.
Future.
Plain title.
I would say legal title,
Oh,
Legal.
yeah.
because equitable title is the right to claim legal title later. And I usually end up using the words legal title when I talk about, again, deed of trust. You're giving legal title to the trustee. You're keeping equitable title because of hypothecation. And or I shouldn't say, won't say because of, but then you use hypothecation. This right is created once the purchase agreement is fully
Satisfied?
Well, I wouldn't
Oh,
think
no,
it's
wait.
if the purchase agreement is satisfied, it'd be over. I would probably say signed. Once you sign and you give, notification of acceptance, you would have equitable title.
Maybe full completed. Completed.
Meh. Well, I could use completed too. The seller retains legal title until the deed is okay. So
Recorded.
they're talking about this problem is talking about an installment land contract.
Like a seller financing.
Yep. Or just a land contract, right? Seller financing. It's one type of seller financing. Because a purchase money mortgage is a different type of seller financing. Does everybody understand the difference between an installment land contract and a purchase money mortgage?
Can you explain that again?
Yeah, can you say
Sure.
that one more time?
Yeah. Let's go here. So, in a purchase money mortgage, the seller is the bank. So you would see like the purchase when you all do the closing. You know how you can say how much does the buyer have to bring to closing? How much does the seller going to receive at closing? You would see the price as a buyer debit and a seller credit. And you would see the loan as a buyer credit. And usually it's only just a buyer credit because the money's coming from the bank. But if it's a purchase money mortgage, the money's coming from the seller. And so it's going to be a seller debit. And in this instance, the buyer gets title. They get full title today. They don't get equitable title. They own the house. And the seller is just putting a lien on the home. Does everybody see what I'm saying there? The seller is the bank.
Mm-hmm.
But if it was an installment land contract or just a land contract, the seller keeps title. So this is a for years. The seller keeps title for years, and then the buyer is sending money for years. And then when the buyer finishes paying it off, then the seller gives legal title to the buyer. So it's about when is the title being given. Both of them is seller financing.
And is the installment land contract, is that like most mortgages or most?
No. Installment
Oh.
land contracts. This is basically like a rent to own.
Okay, got it.
Right. I'm looking at my chat. Sorry, Emmy. You can talk, Emmy. It's fine. What was the cute little tomato rhyme to remember? It's 5-2-may-toes. So 5280. And that is the mile. That's how many feet in a mile. So this is equitable title. We're talking about the installment land contract. The seller retains legal title until the deed is, I would say, transferred, conveyed. I don't know what they were going for there. This concept helps explain who holds interest while the contract is considered. Oh, what do we call it? We talked about that word earlier today. While you're under contract, we call the contract what?
Contract for deed. Trust deed.
It starts with an E.
Executory.
Executory. Because when it's completed, it would be executed.
Executed.
Right? All right. And next, land can grow through the natural process of blank, which deposits soil by water action. Ooh, what do we call that?
Accretion.
Accretion. The opposite, where land is worn away, is called
Erosion.
Avulsion.
erosion.
Oh, I thought it was avulsion.
So remember, the opposite of erosion is accretion. I know we all learned about erosion at some point. Just remember, the opposite is accretion.
Avulsion, the tearing away of land? No.
You mean the land increases through a sudden change, or I should probably say decreases.
Oh, the opposite,
Right.
where land is worn away. Okay, sorry. I thought it was torn
Yep.
away.
So, I mean, I guess it's increasing someplace. If it decreases in one place, I guess it is increasing in other, but I usually think about it, the tearing away. And then these terms are important in property rights near what?
Water.
Water. And what's the fancy name for water rights?
Riparian.
Riparian rights.
And I know there's the riparian, the lake one that you referenced. Yeah, literal.
Littoral.
Riparian rights are for rivers, and littoral or literal rights is for lakes and oceans. And we know in the West they use you were there first. Prior use come on, you guys can help me. You can help me. What do we call it in the West? Well, if I'm the first one to use it.
Prior
appropriation. That's right. The doctrine of prior appropriation is in like New Mexico, Nevada, Arizona, places like that. In blank tenancy, 2 or more people share equal ownership of a property with the right of blank.
Survivorship.
And what type of tenancy is that?
Joint tenancy.
If one owner dies, their share automatically passes to the
Another one. No, another.
The remaining owners. Right?
Yeah.
The right of survivorship is the idea that if we all owned a property together, and I guess I'll kill my own self off, and I die, it doesn't go to my heirs. My interest will be split between all of you. All right? This differs from tenancy in blank, where shares pass to their heirs instead.
Common.
Yep. Oh, y'all got that one. I see you. All right. The most common homeowners policy is the
ALTA. I'm looking at California
well,
stuff.
Alta is for closings. This is homeowners policy. I know a lot of states don't necessarily do this, so I'm going to fill it in. Is the HO3 or the DP3? Some states test on this, some states don't.
Okay.
For condominiums, it's an HO6.
HOA? also
Nope,
or not?
HO6. So it's here. Let me try to show you. Let me find it before I go so that y'all don't have to watch me scroll. Let me kind of show you what this means in the slides. HO. Here it is. Y'all can see it?
Yep.
Perfect. So some states, you need to know this. Now, you will see the ones in purple, the HO3, the HO4, the HO6, and the HO8. Those are usually the ones I see questions on. So the HO3 is basically your basic kind of, I bought a detached house. Yay! HO4 is renter's insurance. So you all know I just moved to Michigan. I have an HO4 policy. It covers my stuff. If something happened to the house, the landlord's insurance is covering the structure, but my stuff is covered by HO4. HO6 would be condominium insurance. Because think about it, in a condo, you own the paint, but not the walls. So when you own a condo, you have an insurance policy through the HOA for the entire structure. But what about your personal stuff? For that, you would get an HO6 because an HO6 is going to vary. When you all have clients that have condos, the insurance person is going to want to talk to the HOA insurance person and say, hey, where does your insurance end? Are you all doing the drywall or does my client's policy need to do the drywall? Are y'all going to paint and add carpet or does my client's policy need to do that? Every HO6 is a little bit different as to how far out it builds out if there was something tragic that happened. And then the HO8 is the homeowner's modified, which is basically saying the cost to replace a house is more than its market value. And you all have heard me say many times, my dad's house is in downtown Detroit. It is not worth very much, but since it's historic, if you tried to rebuild it, do everybody get what I'm saying? So the cost to replace my dad's house is more than what he could sell it for. Alrighty, we are at, let me get my computer right here. So the principle of blank allows an insurance company to step into the shoes of the insured to recover losses from a third blank. Do y'all have any clue about this one?
Subrogation.
Hey, Dina, I see you. I see you. The principle of subrogation. Does everybody understand how subrogation works? No? All right.
Not really.
So
I don't remember this piece.
that's okay. You learned a lot in class. So we'll use a true story. My mom was living in a townhome, and my car, my SUV, was parked out front. And I came outside, and there was broken glass on the ground, and I was bitter. I was a bitter Candace. So what did I do? I walked around until I found another car that was suspiciously parked, kind of far away. And it also had broken spots and had some of my, and yeah, so it matched. It turned out this car was my mom's neighbor's car. He hit my car, and then when he realized he cracked the tail light and kind of damaged it a bit, he parked someplace else. He was not ready for my level of petty, y'all, because I walked that parking lot. I am
That
petty.
is
Y'all know I'm
so
petty.
crappy.
Right? I'm like, that's why I played the song P-E to the T-T-Y. Cam knows I'm petty. So then I called the police and everything.
Yeah.
Well, guess what the neighbor did not have?
Insurance.
No
Great.
insurance.
That's why he parked over there.
That's why he did it. But that's okay because Candace has Geico. I've always had Geico. They've done me right. Okay. So Geico, if you'd like to sponsor this video, feel free. Give me a year of insurance free. So I called Geico, and Geico gave me the money to fix it because he was not insured and I was. Right? But is Geico happy that they had to come out of pocket? No. So Geico sued the neighbor.
Mm-hmm.
But did the neighbor actually do anything directly to Geico? No, the neighbor injured me. So when we talk about subrogation, this connection between me and the neighbor, I'm basically this right to sue. In order for me to sue you, you had to do something to me. This right to sue, this connection gets sent to Geico. It was with me, but I'm giving that right to Geico so that Geico can sue the neighbor, or if he'd had insurance, his insurance policy, if there was a problem. That's subrogation. I'm subrogating my right to the insurance company so they can sue.
Okay, that makes
Oh, you're breaking up a little
total
bit,
sense.
Cam. Makes sense, you said? You broke up a little bit.
I said that makes total sense.
Cool. And as long as we're
Can you hear
talking
me?
about this, yeah, I hear you now.
Okay,
Does everybody understand co-insurance? Or do I need to go over it?
Please go over.
Yeah.
Dina,
It
you
doesn't
had the
hurt.
look on your face like, I don't even know. You need to go over it. Okay. So Cam, this is the one I said in class. You all will learn if you have more classes with Cam. Cam, has kids. So if she had a 15-year-old, she might say to them, hey, if you save up $3,000, then we will give you $3,000. If you save up $2,000, then we'll give you $2,000 to go towards a car. Does that make sense to everybody? You do what you're supposed to do, and we'll do what we say we'll do. So when you get insurance on your home, let's say your house is worth $470,000. That's the market value. It's worth $470,000. The insurance company, State Farm / Jake and his khakis, says, look, we want you to cover at least 80% of the value. Get a policy for at least 80% of the value. Well, $470,000 times 80% is, where's my calculator? $376,000. Now, spoiler alert, the bank is going to want you to cover all of it. But let's say you didn't have a loan and you just paid cash for the property. You have to get a policy that covers at least $376,000. Well, maybe you paid cash and you're a little short. So you're like, what if I just cover 276? Maybe I just get $276,000. Well, getting 100%, doing 100% of what you were supposed to do is getting a policy for 376. You did less than that. So basically we're saying 276,000 is what percentage of 376,000? With the math of that is 276 divided by 376, and that is divided by 376, 73%, 73.4%. You didn't do all of what you were supposed to do. Instead, you only did 73.4% of what you were supposed to do. Now, dun, 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 there's damage. And let's say that damage cost $65,000 to fix. That was major damage. If you had done 100% of what you were supposed to do, they would cover pretty much the damage except your deductible. But since you did 73.4% of what you're supposed to do, guess how much of that damage they're going to cover?
73%.
73 times. So if we do 65K times 73.4%, the most you would get times 65,000 is, if I did my math right, 47,712, something like that. That's coinsurance. It's a clause that says, hey guys, I really, really, really need you to have a policy at 80%. This needs to be the policy at least 80%. And if you don't, we're matching. You do what you do. It's like matching energy. Oh, yeah, it's just like matching energy. You know, somebody comes up to you and I can say it because it's not a school class. If somebody's an asshole to me, I'm going to give you an asshole right back. That's how this works. And y'all know I'm petty. I might go nuclear if you catch me the wrong. You might have been an asshole. I might be like, oh, you got to die. Right? Don't catch me on the wrong time. This is that same concept. Make sense to everybody? Yes?
Yeah, I like it's, you're right. I will not forget that now.
Mm-hmm. Mm-hmm.
And I'll start with an A.
I love it.
I like that word anyway. It's a great word.
Okay, we're good. Y'all don't know, but this is pretty much what I'm like in an entire class. You're getting the Candace class experience, which is pretty much like I do on the webinars. So there's that. All right.
We miss your webinars. It was very fun.
Oh, you missed the way. I miss you. I love doing this, y'all. I do. So not that I don't love teaching classes like Cam's, but Cam will tell you for our state, I am blue. Do I go this slow in explaining things in class? No. I have to go.
You're pretty quick, yeah.
Yeah, because we don't have that much time. I like this because I can make sure everybody understands.
Yeah.
I do. And that's what I liked about the prep agent,
I
too.
think it also helps, like, once you have an established, like, understanding of some of these concepts, this helps you really understand it.
Mhm.
Okay.
Yeah, this helps a lot for me because I have to always have something in like context. And like, how does it actually work in real life?
Yeah.
That's the word, context. I mean, that's what I really, I'm going to write that down. That's what I want the office hours to provide. I want the office hours to provide context. I'm all about context with these learnings. Okay. Thank you. That's the right word there. All right. This would be third parties. All right. 17. The Truth in Lending Act requires lenders to disclose the blank. Oh.
Closing.
Terms, costs?
Closing disclosure? Closing disclosure?
Well, the closing disclosure has more to do with TRID. But truth in lending, no matter what type of loan it is, makes you disclose the APR.
APR,
right?
yeah.
So this law helps consumers compare the true cost of borrowing. So does everybody understand the difference between the APR and the interest rate? Okay, that silence usually means no. When y'all get
The
silent,
APR includes additional.
yeah. Sarah said, explain it. I got you, Sarah. I got you. So, interest rate. Oh. An interest rate is usually like a flat fee. So if I borrowed $100,000 at 6% annual interest, that means when I pay it back, if I paid it back in one lump sum, I'd pay the $100,000. That's my balance, what I borrowed, the principal, and 6% of 100,000, which is $6,000. That's the amount of interest. Here we go. I always put an extra E in interest, but that's okay. Well, APR which stands for annual percentage rate, which I know it's confusing, is the cost of interest plus other costs. So we know, we've learned in class, when you borrow $100,000, yes, you're going to pay maybe a 6% annual interest. But aren't you going to have other closing costs like points, like a loan origination fee? Did everybody get what I'm saying there? Yes.
Mhm.
So what they do is they say, yeah, you paid $6,000 in interest, but maybe between all those other fees, you paid an additional $1,750. So really what you paid in extra, you might have borrowed $100,000, but if you paid it back at all one lump sum, you would have paid back $6,750. So $6,750 is what percent of 100,000, right? Which is going to be 6.75%. This is the APR. This is the APR, but this was the interest rate. I mean, it doesn't sound like much, 6% versus 6.75, but can you see how there is an actual difference in how much it costs you to do business with the bank? That is the APR. And that is why banks have to share it because of truth in lending. Right? Does that help everybody?
Yeah.
Yeah.
Yay. Good. TILA, which is Truth in Lending Act, also provides a blank for certain loans, allowing cancellation within 3 days. Provides a right of what?
Cancellation?
Decision, decision.
Rescission.
Oh.
There's that rescission word again. We'll just pretend like I spelled that right. This law is enforced by the blank reserve.
Federal.
Well, yeah, it's the Federal Reserve, but we know specifically if it still works, the CFPB. Wait, is it? Am I going? Does the truth?
Federal.
No, I'm losing my, y'all, it's Friday, almost 8 o'clock. Let's ask, I'm pretty sure that it's the CFPB,
Oh,
but
yeah.
we're going to ask ChatGPT because, it's time to talk to Uncle Ray. Hey, Uncle Ray. Who enforces the Truth in Lending Act? Is it the CFPB or some other government entity?
Yeah, that's a good one to know. So the Truth in Lending Act, or TILR, is primarily enforced by the Consumer Financial Protection Bureau, the CFPB. They kind of took over that main enforcement role from other agencies when the CFPB was created. But depending on the type of lender, there can be some other agencies involved too, like the Federal Reserve or the OCC. But the CFPB is definitely the big name in charge nowadays.
Thank you.
Absolutely. You're always welcome. If you have any more questions, just give me a shout and I'll be here.
Sarah, I see you said your mic isn't working. That's okay. Keep typing. I just catch it a little later. So again, Uncle Ray to the rescue. He explains things well. If y'all aren't paying your little dollars for ChatGPT, it is well worth it. Well worth it. So the Federal Reserve and the CFPB, and remember the CFPB was created by TRID, the Truth in Lending, RESPA, Integrated Disclosure, right? So TILA and RESPA. 18, the Comprehensive Environmental Response Compensation and Liability Act is often called, CERCLA?
Sarah?
Well, this one's hard. CERCLA.
It's
I would have
toxic.
said CERCLA. It created a Superfund Act. So maybe Sarah?
Oh, Sarah is the EPA one.
Well, they're both the same. So does
Oh,
everybody understand what CERCLA and Sarah says? Does
I know it's
everybody?
for toxic hazardous. That's it.
Yeah, so what basically happened, and I am going to show you my slides for this one because I think this is important to understand as a person, but also as if you go into commercial real estate, I think you should understand this one. Like, I think it's good. The Comprehensive Environmental Response Compensation and Liability Act. This act reminds me of cleaning my house. Y'all ever look around and like open a bathroom or a junk drawer or a closet and you're like, ew, this needs to be clean. And then you close it and you're like, if I can't see it, it's not there. Right? That is CERCLA. CERCLA stops that from happening. CERCLA says, oh, you found some hazardous substances in the ground. You cannot just put the dirt back on it. You must clean this up. And you've got to clean it up to federal standards. You must clean this to federal standards, which is expensive. So they started a trust fund because CERCLA was like, yes, somebody's got to pay for it. And we're going to make everybody pay for it. But what if you all don't have enough money? We need to have money in a trust funds because this is our environment. And, we're basically in a dumpster fire right now. So cool. Well, the original trust fund was set with CERCLA. And then a couple years later, they were like, oh, dude, this is going to be more expensive than we thought. So SARA, which is the Superfund Amendments and Reauthorization Act, it increased the trust fund to 8.5 billion in 1986. And I had, Uncle Ray do this for ChatGPT. That would be $24.8 billion today. They were like, oh, we need more money. So in case everybody doesn't realize how big a billion is, I always like to, put it in context. 1,000,000 seconds is 11 days. 1,000,000,000 seconds is 31 years. So when we say $24.8 billion, that's how much money they put in that trust because there's so many things that can, y'all know we used to just bury it like, oh, we can't see it. It's gone. But that's not working out so much. And I see you, Sarah. Yes, he does have a wonderful voice. Uncle Ray does have a wonderful voice. He does. Right. So that's Sarah and CERCLA. I think it is really important to know. Right. Let's go back. Is it going to let me? There it goes. Yay. So, Sarah, liability can extend to current and past owners or users. Anybody who's ever used the property or related to the property is going to pay. Real estate agents must disclose known, I'm going to call material hazards. I don't know this one. Material hazards. If you know there's something maybe environmental. How about if you know it's a problem and it could cause cancer, maybe grow in a third ear, you probably need to tell somebody about it. Right? We're going to go up to 20 because I know it's been 2 hours, but remember, I'm going to do this part 2 if y'all are going to be here Sunday at 6. But we'll get to that in a second. In appraisal, the principle of blank states that a larger or nicer property may lose value because of surrounding lesser homes.
Regression.
Regression.
The principle of blank is the opposite, where a smaller or modest home can gain value by being near blank properties. Progression. By being near nicer.
Higher value.
Yeah, higher value. That's better. Somebody sounds much more professional than I do. Higher value properties. I think that was you, Amani. Like that, much better than what I was saying. And appraisals are based on the principle of
Substitution.
20. My favorite word in real estate, My second favorite word in real estate is ETJ, extraterritorial jurisdiction. But my first favorite word in real estate is means to pledge property as security for a loan while retaining. I don't know what word.
Collateral?
Hypothecation.
Okay.
Hypothecation means you're pledging property as security. So it's the opposite of a pawn shop. It's the opposite of a pawn shop. A pawn shop, if you need money, you leave your item there. They keep possession. In hypothecation, you get to keep possession. I have no clue to what word they're
Yeah.
looking for here. Actual possession? I don't got nothing. Mortgages and car loans use hypothecation because the borrower lives in and uses the property while the lender holds a blank.
A lien.
I would say a lien.
Yeah, a lien.
Yeah. Lien.
If the borrower defaults, the lender can foreclose to satisfy the
Debt.
debt. All right, guys, did this help?
Always.
Yes.
Yeah.
Yeah, this is great.
Yes.
So, I'll be back. So today is 8/22/2025 for those people watching this later. I will be back on Sunday. This will be recorded. I'll probably fix it up and post it tomorrow, sometime tomorrow, maybe after our appointment, Carl. And so I'm going to say, this is going to sound, I cannot believe I'm going to say this, but you all have told me I should do this, a couple of y'all, so I'm going to do it. I created a website. Where's my thingy? So you all said you wanted to be able to do something. So it's buymeacoffee.com and /Candace. Some of y'all were like, I want to do something for you. So just buy me a coffee. If this helps you, you can just go to buymeacoffee.com and just look up Candace, and then you can buy me a coffee. You do not have to.
Okay,
But there were some of
cool.
y'all that were like, hey, I want to do something for you. And it's actually buy me a chocolate because let's be honest, I don't drink caffeine, nor do I need it. But there you go for those who asked, and I'll make it available. But it really will go towards chocolate. Please, I will promise you the chocolate will be eaten. All right, I'm going to press stop recording. But does anybody need anything? Will I see some of y'all on Sunday?